Hello and welcome to Simplicity in Stocks. We live in an interconnected, globalized world. This is why a decision that impacts one country will have a ripple effect on another. US President Donald Trump's threat to impose tariffs on a small country of Colombia last month was enough to spook the markets. But that was just the beginning. Trump then imposed 10% tariffs on imports from China. In response, China imposed 15% tariffs on imports from the US. Now, Trump has planned to double the China tariff. A major universal tariff of 25% has also been imposed on aluminum and steel on all countries exporting these goods to the US. Mexico and Canada temporarily avoided tariffs last month, but these two nations are now once again in Trump's crosshairs. There are now reports of tariffs on European countries too. And then came the bombshell announcement of reciprocal tariffs. These are yet to take effect, but when it does, they will have major implications on global trade. The second and third order effects of these tariffs will only be known later. Now, the stock markets don't like uncertainty regarding trade. This uncertainty has caused fear in the Indian market about the impact of tariff policies on the profits of companies. But the big question here is, could these tariff policies be the cause of a full fledged bear market? The one thing Dalal Street fears. A bear market is defined as a fall of 20% or more from the market peak. Since the Indian market peaked back in September 2024, the mid cap and small cap indices have fallen more than 20%. So we can say that the broader market of mid caps and small caps is already in a bear market. But what about the Nifty? Well, the Nifty is down about 15% from the all-time high at the time of recording this video, as you can see from this chart. Thus, despite the massive declines that we have seen in mid-caps and small caps, the Indian stock market has not entered a bear market, at least not yet. And this is the big fear on Dalal Street. If trade wars were to heat up, India will feel the heat as well. Most Indian companies might not feel the effects too much, but the companies in the impacted sectors will take a big hit on the stock market. Now do keep in mind that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There are no views or opinions covered on any stock herein. Sectors like software, textiles, jewelry, commodities, and finance are more integrated with the global economy than others. Many investors wouldn't want to take the risk of holding on to such stocks. So, in a worst case scenario, the Nifty could fall into a bear market, that is a correction of more than 20%. Traders might remember the days when Trump was US President last time. His tweets and unscripted comments could make the markets move sharply, resulting in either profits or losses depending on the direction of the trade. So, the market is closely looking for clues about how Trump's policies will drive individual stock prices. So, is a bear market coming? Well, to be honest, we cannot rule out this possibility. After all, the ongoing correction in the broader market of mid caps and small caps has badly impacted sentiment among retail investors. At the time of recording, foreign investors have sold more than $25 billion in the Indian stock market since September 2024. If the negative sentiment in the broader market were to creep into blue chips too, then the risk of a bear market will become real. So far, the Indian market has avoided that, but it is something every investor should keep an eye on. The magic number here is the 21,000 level on the Nifty. A fall below that would confirm a bear market. A fall below 20,000 would likely result in extreme pessimism among investors. But this scenario would provide an excellent opportunity for long-term investors to buy meaningful amounts of shares in high-quality stocks. Such investments could provide life-changing profits. Should you buy, hold, or sell? In these uncertain times, Indian investors must remain cautious and vigilant about the changing trade landscape and the risks associated with potential tariffs on Indian goods. Also, do your due diligence. Consider factors such as valuations, industry trends, corporate governance, and market risks before making any investment decisions. And if you're worried about stocks in your portfolio, ask the following questions. Are the company's fundamentals weak? Has there been any recent negative changes in the company's fundamentals? Did the P ratio of the stock shoot up without an improvement in the company's earnings? Did you make a mistake in your original analysis at the time of buying? These are all good reasons to sell or at least reduce your holdings. But as is the case with any stock, you must allocate sufficient time to do the necessary due diligence. If the answers to the questions above is a clear no, then you can consider holding on, especially if the valuations are not too expensive. But what about buying stocks now? Well, to find good buying opportunities in the market today, look for fundamentally strong stocks where fear is at its highest. Stocks with the highest fear factor satisfy the following two criteria. They should have fallen at least 20% in this correction, and they should be trading at low price to earnings (PE) and low price to book (PB). These are the best stocks to invest in right now as long as the fundamentals are strong. An interesting 4 years lie ahead for financial markets. Navigating Trump's policies as well as his occasional eccentricities will become par for the course. But such developments should not distract investors from their main job of identifying fundamentally strong stocks that are trading at reasonable valuations so as to buy them for the long term. Happy investing.